Cocoa prices have tumbled by more than half in 2025, while coffee has managed to stay surprisingly firm. What's behind these contrasting moves in two of the world's most traded soft commodities? And could coffee soon face the same pressures that sent cocoa tumbling? In this special StoneX Market Intelligence series, we sit down with analysts Lucca Bezzon, StoneX Brazil market intelligence analyst and specialist in the cocoa market, and a coffee specialist, Fernando Maximiliano, market intelligence manager at StoneX Brazil. Thank you for joining me, Lucca and Fernando. Cocoa prices have fallen dramatically this year, while coffee seems to have held up better. What explains this divergence? Maybe we could start with Lucca.
Hey there, Fiona. It is a pleasure to be with you again today. To answer your question for cocoa specifically, the collapse in prices during 2025 can be explained mainly by the expectation for a surplus on the balance between supply and demand for the new harvest, the 25-26 season, which starts now in October and goes until September 2026. The hopes for a bigger surplus during this harvest have been long awaited by market participants, as the sector had to go through 3 consecutive years of deficit on the global balance, followed by a small surplus last harvest, which wasn't able to recover stocks to normal levels. For instance, the expectations for a bigger surplus this year can be justified by 3 factors that act together simultaneously. The first factor is that we can point out is that the market participant expects marginal recovery in the production of the main producing countries in West Africa, which are Ivory Coast and Ghana. The second factor comes from the new investments made worldwide in the sector, which is in part a direct consequence of the new price levels since 2024, which influenced the expansion of areas and the use of fertilizers and pesticides, which probably increased productivity during the last few months. And for the third factor, which is probably the most important of them all, we can cite the destruction of demand that was caused by the record high prices, which has damaged especially the industrial use of product over the last 2 years.
And Fernando with coffee?
Yeah, so when we look at the coffee and cocoa market, historically speaking, there were some times in history where those markets share a similar trend, and it is related to weather issues and many other things, as we are going to present throughout this series. But important to mention, throughout 2025, as Lucca just mentioned, the decreasing demand on the cocoa side was a key factor for lower prices. While for coffee, we had a different, actually, when we look at demand, there are similarities. There are plenty of indicators showing that demand has been decreasing because of the high prices. But there are structural differences between coffee, which indicates that the same reason that cocoa prices suffered will not affect coffee. However, other topics are very important as well. But throughout 25, as we saw cocoa prices under pressure, coffee were seeing a different mood, mainly for the Arabica market in New York, and that was because of a lower Arabica production in Brazil. And we have also a weight of the tariffs on this as well. Prices rose a lot from August onwards because of the tariffs that the United States placed on Brazil imports. So there are many differences that set those two markets in different directions.
And looking ahead, do you expect both markets to continue moving in opposite directions? Lucca, what are your thoughts there?
Well, for cocoa, the scenario suggests some stability for the next few weeks, with fewer bearish and bullish fundamentals acting upon the cocoa prices compared to the last few months. For once, the bearish factors have been priced for some time now, and only a surprise coming from the supply fundamentals specifically could make a clear influence for a bigger drop in prices that have already been priced in. However, the contrary also applies. If there are any surprises in relation to the cocoa deliveries, especially in Ivory Coast during the next few weeks, cocoa prices could reverse the recent trend and could return to higher levels as we've seen during 2024. For now, however, the market participants will continue to wait and see how the harvest will unwind, which explains the lower volatility in prices over the last few days as investors wait for the next signals of how the harvest will be developed.
And Fernando, what's your take there?
Well, we expect the coffee market, to continue to see high volatility. There are many factors. One of the questions is that would coffee prices fall following the similarity with the cocoa, and we'll go through that. But we wouldn't see coffee falling based on the same reasons. However, there are some important topics that could give the coffee market a new direction, and that relies on the development of the crop in Brazil. Brazil, as being the largest global supplier, has a very strong weight on the coffee market, and we are in a very key, very crucial stage, which is finishing up the flowering and starting the early stage of development. And any weather issue now could cause a problem in the size of the production in 2026, and that is a key topic. Also, another thing that's important is if the United States will take off those tariffs out of Brazil. So those are things that are going to influence the coffee market, which will probably see a higher volatility throughout the coming months.
Well, this was just a glimpse of what's ahead. In the coming weeks, join us for 3 in-depth conversations with Fernando and Lucca. We'll come back on the dramatic rallies that both markets experience, explore how today's prices compare to the 1970s peak, and finally ask the big question: could coffee be next to fall? Stay tuned.